How tech companies made billions and paid zero taxes. It's reasonable to assume that with a $10 billion profit in 2018, Amazon paid a hefty sum in taxes. Nope, it didn't. However, they made $129 million in rebates. That's really impressive. A pizza party paid for by the taxpayers, even though you make enough money to buy a country. After paying a fair share, you and I are left with hardly enough to put food on the table. How do these mother-hustling oligarchs manage to avoid paying taxes and bring home billions? Here in how tech businesses made billions and paid zero taxes. We will explain. Luxury Dragon is gathering spot for the next generations of wealthy people. You are missing out if you haven't subscribed to our newsletter and to our channel. So let's start. Number 1. It's not illegal. Yeah, but it's also not right. Let's say you're taking an exam and the proctor tells you to bring a list of questions you like to see on the test. That's how large internet firms and other corporations can get away with no slack in their tax avoidance. They can afford to advocate or campaign in British English for the specific tax deductions they seek. It's not shady or secretive in any way. Research on this tax avoidance strategy by big tech was conducted by the Institute on Taxation and Economic Policy. In the paper, authors Matthew Gardner and Steve Vamhoff state, by all appearances, the corporations represented in this analysis appear to be employing a totally legal techniques to decrease their tax costs. Thus, it's lawful. However, does that justify it? Surely not. They're still reliant on public services despite not paying their fair share of the costs associated with maintaining them, including as roads and infrastructure, public health care, and homeland security. Individuals and family-run companies are. Number 2. So what are the figures we are talking about? 60 of the Fortune 500 businesses did not disclose any federal income tax expense in 2018, according to an analysis by the Institute on Taxation and Economic Policy. 11 are involved with either technology or transportation. It was claimed that Amazon made a $10.8 billion in the United States during its 2018 fiscal year. Instead of having to fork out $129 million in federal taxes, they were instead issued a 1% tax return. An Amazon spokeswoman told CNBC that the company also paid billions in state and local taxes on top of its federal income tax payments. In addition, it was stated at that time, Amazon had produced over 250,000 new jobs. However, many of these workers are low-income individuals who rely on publicly supported areas of life such as healthcare, education, and transportation. As the spokesman elaborated, Amazon pays all the taxes we are obliged to pay in the United States and every country where we operate, including the $2.6 billion in corporate tax and $3.4 billion in tax cost over the last 3 years. Number 3. Tax Cuts and Jobs Act of 2017 left a poor public inheritance. While this is hardly a new practice of the world's most successful and infamous IT companies, 2017 made it far less cumbersome. Concerns about tax avoidance by large US firms were not addressed by Tax Cuts and Jobs Act of 2017, which was passed by the Trump administration. Rather, it was favored by the new law. With this law, the corporate tax dropped from 35% to 21% only. It also enabled accelerated depreciation, wherein business could quickly deduct the value of their capital investments and equipment. Executive stock options and research and development expenditures, formerly known as R&D, are tax deductible. At number 4, we are looking at how R&D has become a scapegoat. Businesses have always been able to deduct the expense of research and development, also known as R&D or research and experimentation. You may argue that this encourages investment in new ideas, but the reality is that tech companies didn't need any more tax advantages to be creative or attract funding. That is essential to the success of their product, whether they offer an incentive or not. It's like how Starbucks rewards repeat customers with points, even though you probably would have frequented the chain regardless. Research and development incentives have been around even before the digital age, where product innovation has become the main focus. Another possible explanation is one provided by Anup Srivastav, an associate professor at Canada's Hoskane School of Business. Gone is the notion that R&D is optional, that corporations need to be incentivized to spend money on R&D. The only way for a business like this to stay in business is to invest heavily in R&D. Number 5. COVID and tax breaks like the CARES Act. It's crucial that the government provide tax relief to businesses in the aftermath of natural disasters. However, tax breaks don't always help those who need it the most. For instance, US government's rolls out of the CARES Act to mitigate the economic effects of the COVID-19 outbreak opened the door for major corporations to make profits. According to a report by the Institute on Taxation and Economic Policy, businesses now have a new way to legally avoid paying taxes by using carryback losses to reduce their taxable income from early years. Many people got tax refunds in 2020, meaning they didn't have to pay the 21% tax on their profits like they would have in the previous years. The 55 largest firms in the United States avoid paying $8.5 billion in federal taxes, but instead received a tax credit of $3.5 billion. When tax revenue is needed most so that immediate relief can be provided to the public, the government instead paid $3.5 billion to large corporations. And lastly, number 6. Stateless income and tax havens. The creation of stateless income is just another form of tax avoidance that multinational IT companies like Google and Apple may use with ease. In doing so, they are shifting their earnings to tax havens and reporting losses in nations with high tax rates and complicated tax reporting requirements for things like research and development. Finally, let's define the term tax haven. Because of their low or non-existent corporate tax rates, countries like Bermuda, Luxembourg, and Ireland are able to entice major corporations to set up shop there. Because of this fantastic opportunity, numerous international corporations, including those in the technology sector, have established their headquarters in these areas. All billing and money transfers are handled from this location. When it comes to revenue, the United Kingdom is crucial for Facebook. Sales for the year were $1.3 billion, yet they only paid $40 million in taxes to the UK government. As a result of wanting to take advantage of Ireland's comparatively low corporate tax rate, the company's headquarters was established there. They also opened satellite offices across international boundaries in nations that provide generous tax breaks for expenditures on things like employee training, capital improvements, and of course, research and development. The businesses saved through funds is the money in the bank.